Just last week, Dow futures rose to a record closing high. The Nasdaq and the S&P 500 also wiped out losses amid less jobless claims and the central bank easing fears of the possibility of inflation. Joining us with perspective on the stock market is the prolific financial analyst and commentator Gary Shilling, president of A. Gary Shilling and Company. Sir, thank you so much for joining us.
Delighted to be with you.
So I read you're feeling a little bit bearish on the current state of affairs. Now, this was last year, late last year. Can you tell us a little bit about why you're erring towards the side of being bearish as opposed to bullish on the stock market?
Well, I think the stock market has really gone into a realm of speculation. When you look at things like GameStop and all the new issues and speculation in commodities and young people who've never had any experience decided they're going to beat up on the pros in GameStop and some of these things. I mean, we've gotten a very speculative climate. What's happened is you've had a huge amount of money pumped into the system by the Federal Reserve and of course by all the money coming from Washington, the fiscal stimulus. And that money has not gone into spending on goods and services. It's basically gone into investments and largely into equities and speculations. And I think these things have really gotten out of control.
And I definitely want to talk about GameStop because, again, there was another surge in their stock. President Joe Biden, he is not halfway through his first 100 days. Any surprises so far as they relate to the stock market?
No, I don't think so. I think his script ahead of time was pretty well prepared, and he's come in. One thing he has done, though, of course, is put out a proliferation of executive orders. These basically bypass Congress, and he had about 30 of them in the first week in office, much more than any of his predecessors. And what he's doing is he's undoing a lot of the regulation that putting back the regulation, I should say,
imposing them, right?
Obama put on, Trump took it off, they're putting back on, and this has to do with the Keystone XL pipeline, labor regulations, and so on and so forth. But it does indicate that Biden is very much in the liberal side of things, and despite his calls for unity, I think it's pretty clear that he's on the other side of the ledger.
Right. And I think a lot of people had fears that because his agenda did include climate change and what the response to that would be, a lot of people put out of work, the fear of gas prices rising. Of course, we've all been to the gas pump once or twice since he's taken office, and we have seen those prices going up and up and up. Now, as far as interest rates are concerned, what are we looking in terms of interest rates? A lot of people, they were put out of work last year, but then you've got kind of a new crop of homeowners that are coming up, or hopeful homeowners. Are we going to see any change in that, do you think? And what does that, what kind of impact do you think that's going to have on the housing market?
There's been a rise in interest rates lately, but I don't think it is going anywhere. They're still down tremendously from where they were back in the Great Recession, the 07-09 recession. And the root of interest rates is inflation, and inflation remains very subdued. It's really a matter of excess supply over demand. And when you look at all the production in Asia, they're big producers, they're not consumers. So you've got an excess supply of a lot of goods and services, and that really is deflationary. So I just don't see that. There's been a rise in interest rates, as you point out, in anticipation of somehow of rising inflation, but I don't see it there. And I've been on the other side of that coin. I've been a bull on lower inflation rates and higher Treasury prices because of lower yields. It's really since the early 80s, and I don't see any reason to change that attitude.
Okay. Now, for people who are more financially savvy or who trade on the stock market, you did say recently that when a shift becomes more apparent to investors in the stock market, that they will move from a risk-on strategy to a risk-off strategy. Can you tell us what that means?
Yeah, well, there's a lot of shorthands in Wall Street, and in this case, risk on basically means that you're long equities and particularly speculative equities like GameStop, and you're long commodities because you think the economy is going to be so strong that copper and oil and everything else is going to the moon, and you're negative on Treasury bonds because you think that there's going to be more inflation and that interest rates will rise. Now, if you're a risk off, you're completely the reverse. You're looking for the stocks that are going to, if anything, fall, that they're overpriced, and that low inflation is going to be continue to be favorable to treasuries. The commodities, there's no shortage of commodities in the world. There hasn't been historically, and so you don't get too excited about that. So they're really just flip sides of the same coin.
Well, I want to ask what your prediction is for 2021, but before we do that, you've mentioned GameStop a couple of times, and I do want to address it before we go because, again, we saw another surge amongst these Reddit forums that drove the stock back up again. So what does this speak to people who are investing? What are the hedge funds saying?
If you're a speculator, or if you've got some mad money you want to play with, and you really can't get out to go to a gambling casino, well, why not? You can do this from your own computer. Well, if you're a serious investor, I don't think you'd really want to really be involved. I mean, the volatility, when you look at some of these stocks, AIC, GameStop, they go up and down 30-40% in a day. I mean, that isn't really investing. That's just speculation. But if you feel like you're in the house, you haven't got anything else to do, why not? But
mad money. We're not all Jim Cramer, though.
Yeah, and remember that individuals are playing against some very, very smart people who follow these things extremely closely, and I wouldn't bet against that crowd.
That's good to know. Sir, finally, any predictions for 2021?
Well, I think the economy is it's moseying along. We still have a lot of recovery to undertake from the pandemic. They're rolling out the vaccines, but slower than anybody had hoped. I mean, the Federal Reserve, they have just testified. Chairman Powell and other Federal Reserve governors have testified in Congress in the last couple of days, and they really have pedal to the metal. They don't see the economy taking off anytime soon, so they're going to pursue continuing easy monetary policy. So, and I think they probably are have a good handle on things. I just don't see the economy running away. A lot of people have been hoping that, but I think that's down the road.
Slow and steady wins the race. Sir, I want to thank you so much for joining us today.
My pleasure.
We're back after this.